Welcome back, folks. I just wanted to thank everybody that ordered the weekly wrap, and for those of you that have already purchased the trading manual, I really appreciate the business. Uh, so I want to take this time to go over what might be happening this week, um, and what I do kind of like at night and when I wake up in the morning, to see how the day might go, or the night before, see how things might shake out in the morning. As you can see here, I'm on Yahoo Finance, and the headline news for tonight, when you wake up in the morning, is there's going to be some Korean tensions, and you can see here the Asian markets, they're a little bit lower, um, and they're talking right here about the tensions escalating. So what you can do if you want to check futures after the market closes, or before you go to bed, or when you wake up, you can just type in futures here in Yahoo Finance, and you can scroll down here to Bloomberg, and then you'll see the Dow futures here are down 31. The S&P futures are down 4, and then the Nasdaq 100 futures are down about 6. So anytime you want to check futures during non-market hours, you can always just pull them up. So this week, it's hard to say what's going to happen because Friday's a short day. The momentum is still bullish. So it's kind of going to depend on what these earnings come out. We got some tech names that we're going to look over, and hopefully, if the bulls can just hold for the week or maybe push a little bit higher, then we're going to try to hit those targets. I keep mentioning 11.6, 11.7 for the Dow. Right now, you'll see we're 11.5. And then here for the NASDAQ, we're looking to shoot past 2660, which should get us up to 27. And then hopefully in early 2011, we could hit 3 on the index. So let's go over some earnings. Again, we're putting the horse before the cart here, and um, I want to be honest with you. I still think we might hit these upper end targets of the market, but there really isn't a lot of sense for the market to go up. Um, Not to get too political, but the dollar. It's what Bernanke's doing is either going to pay off or it's gonna really hurt us. So. Um, we're going up, and like I said, you don't fight the trend. We went bullish since September, and it's just it's hard to trust a market that you think wants to go down. But like I said, we've been rolling since mid September, and we'll keep riding it up. But like I said, you always got to watch the support levels down below, and if we see things start turning around to the downside, then we exit some of the trades we're in, and we start looking for puts maybe, or maybe we sit out and see what happens. The last week of December and the first week of January are kind of the last week of December I don't expect much, and then the first week people get back from trading and the holidays. It's probably going to be a feel out session. So earnings for the first quarter are going to be right around the corner, so that's what's going to be the catalyst to take us higher or lower. So for Monday, we're going to look at Adobe. They report after the bell. And then, like I said, when you're doing these research for earnings, I talk about in the manual, earnings are just kind of a feel thing. I mean, a company can say a lot of great things and then disappoint on guidance, and you're stuck on the wrong side of the trade. But for Adobe, we've been wanting to play a strangle, and the last time we played it, let me see if I can bring this up here. I'll show you some historical prices because I want to show you the 25% move the stock made right here. On September, we did a strangle trade. Um, I thought the stock would move 10%, but it actually moved 20%, as you can see here. The day before, went out at 33, and then they kind of disappointed the street a little bit. So shares tanked. The puts made 500%. The calls lost money, but overall the trade was up probably 175%. So here we are. Fast forward to tomorrow. It looks like they're going to report after the bell. So we could actually try to do a trade. Um, you can see here shares are at 29. So if you're figuring, I don't really think we're going to move 20% again unless they knock the cover off the ball, but they could. So, but let's factor 10%. So at 29, basically, 10% is $2.90. So let's just say $3. So um, that's a 10% move. So the stock would be at, let's see, 32. So when you're looking at the options, your call options here, um, right now, tomorrow you can probably buy these January 30s at a buck 15, and then if the stock's at 32, right off the bat, these are going to double. So if you want to play Adobe to the long side, that's your trade. 1 day trade in and out, close half. If they do well and beat and the stock does move up. And then for protection, let's say you didn't think Adobe is going to beat earnings. Or I'm sorry, not really for protection, but let's say you wanted to take the other side of the trade. Um, if you will look here, a 10% move from 29 will probably get the shares down to 26. So again, you would look at the 28s here. If shares are at 26, then these options will be worth at least 2 because they'll be $2 in the money. So these might double as well. Um, so the bulls would play the calls I just showed, and if you were bearish, you'd play the puts I just showed. Now together, this is where the math gets a little tricky. This is going to be 120, and then again, if we go up here to the 32, let's see. The 30. I'm sorry. It's 112, so we're looking at 250 to straddle this trade. So shares would have to move a little bit more than 10%. So let's see, we paid 250 for it, and then if shares jump to 32, the calls will be worth 2 naturally. So you'd still be losing money on the trade. So you'd really want the 20% move would actually be, let's see here. Let's do this again here. Let's say 20% of that, let's say $556. So if this stock moves 20% again, yeah, it's going to be another home run trade. The only thing I don't like, again, is I just think it's going to move. It might not even move 10%. And if I were going to play it personally, or I was going to recommend it in the newsletter, I would go with the calls. But tomorrow is going to be an iffy day with the Korea tension. So, it's best we probably sit out. We got a put option trade currently, so that's going to protect us from some. And then we've taken half profits because, like I said, once we get up near these resistance levels, we just need to protect ourselves. The other one I want to show you is Jabal Circuits. They're going to be reporting after the bell. We are already in this trade, so you can see Friday night shares went up a little bit more after the close, and this stock might actually trade higher today because a lot of people are expecting good things from them. One of the things I wanted to show you is all these hold recommendations. So if they actually report good earnings, then we might see some upgrades, which will get things rolling. You can see here, these are the upgrades and downgrades. So really, there hasn't been a lot of upgrades or downgrades. I don't know if this really isn't updated by Yahoo, but like I said, there's 17 holds in this stock. So if they do announce good earnings, then hopefully, no matter what the market does, we should be in good shape. Uh, as you can see, shares bottomed out here in September, and then they kind of broke resistance here through 16. Um, and now we've broken out through this little bit of resistance. So right here is going to be resistance right near 18. So if they say something good, then we should go higher. Um, like I said, we may sell half of this trade just because earnings are hit or miss. The other company that's going to be reporting on Monday is Darting. We just made probably, I think it was 170% on this recommendation. So as you can see, we got shook out of the trade. They're going to be reporting. They're going to be reporting tomorrow as well. So I kind of wish we didn't. We still had half open, but we'll probably just sit on the sidelines with this one. But I really think shares will be at 60 sometime next year if the market keeps running higher. So we'll probably sit everything out for Monday and maybe close half the Jabal trade. And then for Tuesday, there's 3 companies we're watching on Tuesday. One's going to be CarMax. You can see that's near 52-week highs. Actually just made one Friday, another one. Actually, if we were going to do earnings on this trade, it'd probably be bullish. Just they've made a heck of a comeback. So if you wanted to look at some call options, the 35s are going for $2. So shares would have to run up to 37, 38 to have a little profitable trade on this one. I just wouldn't feel comfortable shorting it. But again, I wouldn't really feel comfortable going long. It just feels right, but it doesn't. I just don't trust CarMax. As far as the other one, the other 2, Carnival is going to be reporting. Again, they could surprise to the upside. I just don't like it. And then we got Nike. We've played Nike probably 3 or 4 times that I can remember, just in the last 2 years probably. And we've always gone bullish on them. We've always played calls on them. If you can see here, we'll go back. They actually blew out earnings last time, and shares rocked. Let's see if I can show this to you. Let's see. Because they probably reported September somewhere in here. This is where they popped at right here, $3 or $4. But afterwards, they consolidated here right around in the low 80s, and it's been a strong ride up. Like I said, from here, it just kind of stayed flat. So I don't really know. I really don't have a lot of guess what Nike's going to do. I would like to say they're going to move 10%, but you saw what FedEx did. We were fortunate enough to get in and out before earnings, which, a lot of people will get into an earnings trade way before earnings, maybe a week or 2 before earnings, and they'll see shares run up just like we have with Jabal, and then they'll totally be out of the trade, which is great. There's no risk in it. You're on the sidelines, and if it goes up, you're disappointed that you didn't stay in or have half. But most of the time, the easy money's made before the trade. It is hard if you're doing the one-day earnings trade. Really, it takes a lot of research. You can look at past histories of companies and see if they beat and all that, which is why we've been successful with Nike. But right now, it just feels it's gone a little bit too fast, too far, and it just kind of looks like a setup trade. And then for Wednesday, we've got Bed Bath and Beyond, which is normally a pretty big mover. Let me double check to make sure they're reporting Wednesday. Yeah, they're reporting Wednesday. And then if you wanted to look at their past earnings, like I said, the move they've made, just go back 3 months. So, tomorrow's the 20th. So if you wanted to see kind of what their stock did, just kind of get a date 3 months ago. Look right in here. And this is probably when they reported earnings here on the 23rd, because you see that the 8 million shares traded. And if you want to go back one more, kind of look around June 20th, and you'll see also right here, they actually fell $4 after they announced earnings. So Best Buy, Bed Bath and Beyond could go either way. Again, it's not a trade we feel safe with. I kind of like this trade. Micron, they're going to report on Thursday as well. Wednesday. So, let's see what time they are. They're going to report after the bell on Wednesday. The stock's under $10. These type of trades, let's see how far it's moved here recently. It's come up a little bit. It's come from the low sevens here, right there, and we've kind of gone up 10% in a month. As far as a trade, you'd probably with these stocks under 10, you probably want to do options 6 months out, which is why we did THQI. Because these stocks, they're low price, but they're not going to go parabolic on you and go to 30 or 40. So, to take yourself just out of the January trade, a 10% move would get this thing to 9. So these, a lot of people bought these. You can see a lot of people are getting bullish here, and these are pretty cheap. So, these might be worth a look. I'm going to probably put these on the watch list, but personally, you might want to go a little bit further out. The July 10s are selling for about 55 cents. If you split the bid and ask here, see the bid here is 53, the ask is 57. So you could pick these up for 55 cents. And what that allows you to do is that'll give you about 7 months. Now, you'll see here the 52-week high is 1140. So if shares got to 11 by July, you would double your money with this trade. And then if they got to 12, these options would be worth 2. And you'd make $1.50 on them. So, and then they could go to 12, 13, 14. Or, Micron could just totally have a lousy quarter and then be stuck in the single digits for the next 6 months. So I really haven't done a lot of research on this company. It gets grouped with a lot of stocks that I follow, but it's under 10. So, that's just a quick look. To me, that would look like a pretty good trade. You buy a lot more protection. If shares do pop up after they announce earnings, then these options are going to go up. But if they disappoint, just by a little bit or massively, you'll probably lose 50% of your money on this, maybe a little bit more. But the options won't be worthless, and you'll still have 6 or 7 months to play the rebound. The other company that's going to be reporting Wednesday is a favorite of ours in the past, Walgreens. You can see this stock is also near 52-week highs, and we would probably play a call option because that's what we played in the past. but I just don't trust Walgreens either because they've got a history of beating and not beating and stuff like that. So it's really hard to get a feel for kind of what they're going to say this quarter. Again, if you want to check what they did 3 months ago, we would look here, and they actually did well. Stock went up 10%. But if you look in June, let's see, June, it looks like right in here they reported. So shares kind of went lower. You can see they went down to 26 afterwards. And then we'll check one more. Maybe we'll check two, but let's just see what they did all year. So then we would look back in April, let's see, no, March, around March 20th. So right in here, they reported earnings, and shares didn't move much. They were kind of flat. So it's a mixed bag with Walgreens. So out of all the trades we looked at, we would probably go with Micron. But again, this is an official recommendation. This is just me showing you, how to find your earning trades, and then the straddle, which again I don't think's going to be a big enough move for us to play. And if we did, we would probably play calls, but we'll sit on the sidelines. We've got some trades open, probably a dozen or so that, we're going to be closing out before the end of the year, and then we've got the longer-term trades for March and then one for June. So I think we're pretty set up. Again, there's going to be an opportunity to trade some earnings here shortly in January. So I just wanted to get everybody used to that, and then we'll do another video here shortly going over some other stuff. Until then, again, thank everybody for purchasing the weekly and the trading manual. And I'm sorry I made this video long, but I hope you enjoyed it. And if you can, spread the word about us. And if you got a friend that would like the course, let us know. Hopefully we go higher till the end of the year. Talk to you next time.